You have to spend money to make money. And two, debt is your best friend. You
Yes.
will meet people who fund everything out of their own pocket,
Oh,
whose parents built portfolios and they're paid off and they're now theirs. But you know what? You make a great point, and Grant does too. If you're not willing to spend the money and you're not willing to learn how to utilize debt and
yeah.
understand that debt is your friend, you have to respect both of those things and utilize them correctly. But if you can't get over those two humps, you're also, I agree, you're going to
Right.
struggle.
Welcome, my fellow Flowmasters, to another episode of the Cash Flow Authority podcast. I'm your host, Chris Jansen, founder of the Flow Authority, and this show is for high-performing professionals who did everything right. The degree, the career, the income, but you still feel like there's something waiting. There's another level waiting. You're feeling stuck. And here we explore how real estate can become that next challenge worth building, so you can take ownership of your future and create a life by design. Today we're joined by a very special guest, Mr. James Loffredo. James is the founder and principal of Pinnacle Funding Network, a Dallas-based real estate financing firm providing capital solutions to investors nationwide. He specializes in structuring investor-focused lending products such as DSCR rental loans, bridge financing, fix and flip loans, and new construction funding, helping clients scale their real estate portfolios with strategic, flexible financing. Welcome, James. Happy to have you today.
Hey, Chris, how's it going? Hey, everyone. Appreciate the time and really excited to get this conversation going, Chris. I know we've worked together a little bit, but a big fan of the podcast and looking forward to speaking with everyone here.
Awesome. Yeah, really happy to have you. Excited to have you on. Yeah, we just did that refinance DSCR loan. We'll get into kind of the mechanics of what that looks like and the different types of loan structures. But first, I just want to hear a little bit about your background. Would love to hear your story, how you ended up putting this company together and getting into the financing world.
Yeah, most definitely. To be completely forward, my life and life plan didn't start like this, but that's the beauty of it. So, went to school for business, always had a passion for entrepreneurship. Actually was born and raised and grew up in a fifth generation family business in food distribution and trucking. So, complete opposite of real estate and finance, and spent a lot of my initial career working my way up through that business, learning it, and then got to the top and took a look at my future and was like, this isn't quite what I want to do. Took a step back and was like, if I could completely start over, like, where's my passions at? How do I want to spend the rest of my life building? And I was like, I love finance and I love real estate. So it honestly married together through my mentor, who actually worked with a private lending firm down here in Dallas. I got involved, joined the team in sales and managing the sales team. Basically, a firm much larger than what we do, more on the, I guess you could look at like small boutique and corporate side of things, but really got heavily involved in that and absolutely loved it. And we'll get into some of the products and stuff, but same stuff that we do. And then really just saw after 4 years of that, then that there's a need. And I don't think that anyone necessarily has completely figured out the private lending piece. And we can actually have some numbers written down to give the audience a grasp of how big this industry and how big the real estate investment industry is in general. But was like, I don't think anyone has got this figured out yet. Am I going to be the one to figure it out? I don't know, but I feel like I've put my touches on it. So we have been in business as Pinnacle Funding Network for about a year and a half now, and we are what I would consider a more hands-on boutique feel in the private lending space. So that's a 1,000 foot overview. So from the food world
Yeah.
and distribution and trucking to wanting to get into finance and real estate, and now
Yeah.
working with real estate investors to help them finance and get in, whether it's first property or you're doing 100 a month, guide them through the financial piece of that.
Nice. That's cool. Yeah, and
Yeah.
it's crazy the twists and turns that life throws at you and the path that we all go on and how we end up to where we're at. It's always interesting
hmm
to hear that. I know a lot of people listening are in that corporate world like I was, and or maybe they have,
And myself,
yeah,
yeah.
yourself as well,
Congratulations
right?
to you too. Sorry
Oh,
to interrupt real quick, but I did see that you are a full-time entrepreneur now.
full
So
time,
I'm about a
yes,
year and a half
yes.
into it, and it's definitely an empowering that it takes a lot to get to where we want to be. But congratulations to you as well.
Yes, thank you. Yeah, so here's two examples, right? There's a light at the end of the tunnel. Some of you are looking to pivot out of your job, but also it's not necessarily that you have to pivot, right? You probably, I'm sure you work with a
Hmm.
lot of investors who still have their day job and aren't necessarily trying
Oh,
to quit
most
that,
definitely.
you know?
Most definitely. And we can, that's a great starting point too, is that's the beauty of one, residential real estate investing, and two, working with a private lenders. There's so many routes, whether you have an amazing W-2 job where you're buying turnkey rentals, and maybe that's one every year or one every 3 years. Maybe discover portfolio investing where you're buying 10 at a time with your W 2 job. Maybe you're doing rehab to rentals. So
Right.
there is so many different routes. And as you talk with your audience and stuff, I'm sure you've shared pieces of that, but it can really go so many different ways. So whether you're a full-time rehab to rental entrepreneur, whether you're a W-2 worker trying to build that empire and future cash flow for you and your family and generations to come, you can really take it whichever way.
Definitely. Definitely. And I actually thought about this last night, and this is, I'm sure, not a new idea whatsoever, but I have heard people
Mhm.
talk about, oh, just buy one rental a year. That's definitely a strategy, a slower moving strategy, but that can accumulate very quickly. If you do that, what I was thinking, and you tell me on the lender side, you'll
Yeah.
tell me if this is legitimate, but what if you bought one a year and then every 5 years you refinance and you pull out some cash
Mm.
because the rents go up, the value goes up, you're paying your mortgage down, so you're going to have some equity. You could refinance every 5 years. Maybe, I don't know if that'll be enough to buy another property or
Yeah.
not, but let's say it is. Then every 5 years now you start buying two a year, and then in
Yep.
10 years now you got enough to buy three a year, and you're just building that portfolio.
Yes. And you're exactly on the right track. And to be 100% honest, if I was sitting back at a W-2 job or what I was doing before and wanted to get into this, that is probably what I would do. And that's an amazing thing. I have a little bit of an analytical entrepreneur brain. So I like to look at stuff on spreadsheets, and that's an easy thing you can build out in Excel, or if you
Yes.
like to use ChatGPT, or I really use Claude, you could give it that and say, hey, build me out a 20-year model of me working a W-2 job, putting 20% down on a turnkey rental
Yeah.
one at a time for 5 years. And then, yes, doing a refinance, pulling some equity out,
Right.
and then either you don't need to be putting that 20% down, or all of a sudden you're buying two a year, as you mentioned. And it's cool to kind of look at how that scales out kind of data wise and in Excel over a 5, 10, 20 year period. But I love that model out of all of them. If you don't want to become a fix and flipper or rehab to rental person,
Yes.
I think that what you just described is the best way to build wealth doing this.
Nice. Yeah. Because then you can buy, like you said, the turnkey properties. There are
Hmm.
my first property I bought, my first rental property I bought was in Manitowoc, Wisconsin, and I'm from
Hmm.
Wisconsin, so I most of you will not know where that is, but
Yep.
nonetheless, it was a duplex, and I bought it on market on the MLS turnkey, and it's been the lowest maintenance property I've had, and it's been the least headache, and it's been the most consistent performing, consistent cash flow. So, to your point,
Yep.
that's not, and you can hustle and you can do other stuff. That's just one option, but yeah, that's
It is. And that's where it's so beautiful. And that's where, if you don't mind, I put together, I love
yeah.
like some statistics that really make you think. So I'm going to read you this one, and we can take it whichever which way. But what this does to me is shows you how big not only private lending, but how big real estate investing is in the US. And it just goes to show that there is no wrong way to do this. And I get a lot of these statistics from, it's called SFR Analytics. What they do is take big data, and then they're a company that they break it out into all these neat newsletters. They're great to follow on social media, but I took some of them for this. Private lending actually had one of its biggest growth years So it grew from $97.8 billion in 2024 to $121.2 billion in 2025. Now, I'm going to ask you, out of $121 billion in transactions in 2025, how much of the total SFR purchase do you think that represented? So 121 billion was how much percentage of the total SFR purchases of last year? And
Okay.
that is just what private lenders did, not including banks or out of pocket transactions.
And what was the percentage?
What do you
Oh,
think?
you're asking me?
I'm asking you
Okay.
what you
Okay.
think that 121 billion is out of total
Wow.
number, because that 121 to
21.
me was beyond impressive.
Honestly, maybe like less than 1%, I would say.
So I actually, that's interesting. I would have guessed that was like 50%. It was actually 18% of the total transactions. So
Okay.
I didn't do the math out,
Yeah.
but 121 billion was 18% of the total residential real estate transactions last year.
Nice. Getting in my mind with the numbers. So I'm just thinking, I don't know, yeah, let's say there's a billion homes or something and there are 100,000,
Yeah,
but yeah. So
it's in the trillions.
how many transactions a year is that roughly? Like how many transactions a year happen?
And here's some other statistics. So 245,000 homes were flipped in 2025, which is on the rise. Highest was back in about pre 2020, but it definitely is on the rise once again. So over 245,000 homes with over $1 trillion total in dollars.
Nice. That's
Yeah.
awesome.
So that's where people get scared and stuff, and
Yeah.
everyone is going to have their way. And I think it's best to build your own path in your own way. But tying back to what we were talking about, whether you're buying turnkey, you're learning how to go in and rehab and refi a property, I don't necessarily think there's any wrong way to do it. I think
Yeah.
it has to fit your lifestyle and your current spot in life and what you want to do day to day now and in 1 year from now.
Yeah. And then you've thrown around the term private financing a few times. So what do you mean when you
Yes.
say that?
So great question. This is something that I knew zero about before getting into this industry, and you don't hear about it a lot. So, giving you a quick backstory, pre 2008, you're going to go out and buy a house to keep as a rental. What are you going to do? You're going to go to a bank. Plain and
Yeah.
simple. It's easy. You're going to get a mortgage. If you need to fix it up, you're going to take out some type of short term loan. It's easy. Banks love it. People have honestly probably been doing it for the past 100 years. So, 2008 happens, and all of a sudden, banks are not as interested in financing residential real estate. Even primary residence was a huge piece of the collapse in 2008. So now all of a sudden, Chris wants to go out and buy 10 other homes, not just his own home. It's wow. That's just all of a sudden not as attractive. So a lot of private markets, which first started as raising capital, then started as securitizing capital from Wall Street, but not necessarily from banks, became very popular. So private lending came out. And
Gotcha.
what that was is private capital from private companies that would lend to purchase homes and rehab them, eventually DSCR, debt service coverage ratio loans, which looks like a 30-year mortgage, but really is a mortgage that's not focused on the borrower, it's focused on the property,
Uh-huh.
came out and was offered by private lenders. So a private lender is going to offer a product that basically is not from a bank. And it's a lot of the normal things. The DSCR loans are 30-year fixed loans, short-term loans for purchasing and potentially fixing up a property. But as you saw, only 18% of people utilize those at this point. but it's growing year over year and becoming more popular because now, not the stigma from 2008, but you have banks and Wall Street so interested in technology and crypto. They're not interested in Chris's 6% DSCR loan or Chris's 10% fix and flip loan. They want the big home runs. So private lending continues to grow for multiple reasons.
Gotcha. Nice. And so you define DSCR, but what does that actually mean? Can you go more into that? And
Yes.
maybe touch on this too, because I was massively confused about this at first, and now I think I get it. There's DSCR loans, and then there's commercial loans, and commercial loans calculate a DSCR
Mhm.
number that's not the same DSCR that you guys calculate. It's very confusing. You're new at this, and you're
Exactly.
like, because commercial loans, they'll be like, hey, we need a DSCR of 1.25 or 125%. And then you guys are
Mhm.
like, oh, we just need it to be one. And I'm like, that doesn't make any
Yeah.
sense. So
Yes.
yeah, maybe go into that.
Exactly. Yeah. So I guess first, once again, 1,000 foot overview. DSCR loans stand for debt service coverage ratio. So rather than looking at Chris's W-2 income, rather than looking at Chris's debt to income based off of all of his investments, property, stocks, so on and so forth, these DSCR loans are going to look at one property, one asset, whether it's a single family home, a duplex, a quadplex, and what that DSCR ratio is going to be the debt and all of the expenses. So this is where you were talking about people do calculate the DSCR different. When we look at it, we're looking at PITI, so principal, interest, taxes, and insurance being your expenses each month divided by your income, which is going to be the rent collected. So what that is, it's going to be like usually a single digit number. So a 1.0 would equal say 100%. So that means that Chris's expenses are 2,500 a month for all of his mortgage payment, taxes, and insurance. He's getting 2,500 in rent, a 1.0 being a break even. Now,
Gotcha.
we and some other lenders will write even below that, but I don't think anyone is in this business to be negative cash flowing on a property. Even
Yes.
when rates are a little high as of right now, that 1.0 means that you're breaking even. That never used to probably be a goal, but right now people understand that rates are probably going to come down and you don't want to
Mm.
stop investing. That's what I tell people
Mm.
all the time is even when rates are high, when there's blood in the streets, that's when it's time to buy.
Gotcha.
Even if you're at that 1.0, that's break even. Anything above a 1.0 is profit in your pocket, cash flow. So, as you mentioned, yes, some firms like to write to a 1.2, meaning that there's 20% profit left in there for Chris. Some want a 1.35. We have some very interesting flexible guidelines where we can write down into the negatives, but prefer a 1.0 DSCR. And as we mentioned, that is just the equation that makes both us, the lender, and should make both you, Chris, or the borrower comfortable as, hey, I'm at a 1.0, I'm breaking even. Some other lenders on the commercial side will also take into consideration stuff like deferred maintenance. So they might
Mm.
say, hey, Chris, you're on your expense side, you need to have deferred maintenance of X per year,
Yeah.
5% or whatever. So people do calculate them different. We calculate it very bare bone. This is your principal, interest, taxes, and insurance divided by what you're getting for rent.
Yeah. Or flipped. The rent, I think the rent.
Or flipped.
Yeah,
Yes,
yeah.
yes.
Okay.
Because
More
rent
than you want
divided
more
by
than
your
one.
expenses.
You're basically like if it's more
Correct.
than one, you're covering your debt service, right?
Yes.
Yeah.
Yep,
Okay.
exactly.
Nice. Yeah. So I've done both now. I've done the DSCR with you guys for my refinance, and then I've done commercial for a 5 unit. And yeah, so that's why I was curious about that. But yeah, they went way more into the weeds. They do all of their underwriting. They're looking at
They do.
they look at if they have what they call a T12, like basically a profit and loss statement for the past 12 months, then
Yep.
they'll look at all that. Hey, what are you actually
Yep.
spending? What rents did you actually collect? What's your vacancy? They look at all that.
You look
It's
at
very,
cap rates and
yes,
yes,
cap
because like you
rates.
said, you start adding in more units, you're going to have times when you're not at 100% occupancy. You're going to
Yeah.
have vacancy and stuff. So all of that needs to come into play. I would say, try and stay in our lane. That was one thing when you look at private lenders, people
Mm-hmm.
that broker loans, there's so many people out there that are going to say they can do anything. And we really like to be my brother says we're the Jordan and Pippen of private lending, but we focus on 1 to 4 units. We can do more, but we know 1 to 4,
Mm.
whether it's rehab, new construction, DSCR refinancing, inside and out. So I would say that's something to look for when you're looking at private lenders as well. And another quick note, just to bring up a statistic, out of that 121 billion that was done last year, that was with over 10,000 private lenders across the country. Although it's a newer sector,
Uh-huh.
not even close to as big as the banking side, even for funding just residential real estate, there's already over 10,000 across the country that did some type of transactions as of last year.
Wow. You mentioned 1 to 4 units. Selfishly, I'm looking at a 5 unit right now, but it's residential.
Mhm.
It's a five
Yep.
unit. It's basic, 4 1 beds, 1 studio, and it would be like a
Mhm.
flip or a burr type deal. Do you guys
Yep.
do loans for that type of deal, or you're like, nah, it's 5 units. We're not going to touch it.
No, so we do. So what I tell people is we know 1 to 4 inside and out
Yeah.
easy. Up to 10, we can really do. We know very well. And I would say that we can be extremely competitive still. We can do up to 20 just with kind of our products and stuff. But I honestly would rather help people get the best deal possible.
Yeah.
Probably over 10 units, you want to be looking at someone outside of your basic residential private money lender. You want to be
Got
looking at
it.
someone that does know the more commercial side of things. But yeah, we can definitely do up to 10. What's interesting is the private lending world also doesn't have a lot of guidelines. There's not a lot of structure behind it. Technically, everything we do or you would do with a private lender is considered a commercial transaction. It's a
Okay.
business to business transaction. That's what allows us to operate in all 50 states and not have all the regulations that banks have. That's why we don't have to have all of that stuff on file or look at it when we're doing a deal. Now, although even that single family home is technically a commercial deal, in the private lending space, we consider up to a quadplex, so a 4 unit residential. And then once you hit that 5 unit, we consider that more of a commercial style deal.
Gotcha. Gotcha. Yeah, that makes sense. And there's confusion too. There's around all the terminologies, right? Commercial, residential. It's not
Yeah.
commercial, it's residential. It's a residential, right? Property. And then the
Yep.
other thing is multifamily. So I've heard some people, you go on Zillow and filter multifamily, it'll give you 2 units to 4 units, right? Or two and above. But then you
hmm
talk to some people who are in the apartment space and they're like, no, multifamily is 5 and above. If I'm talking multifamily, I'm
It
talking
is.
about duplexes. Yeah, so
It is. And that's where we have people that just do duplexes and they consider themselves multifamily investors. Then
right.
we're constantly doing outreach and we'll meet people who are multifamily investors and they're like, "Oh no, we only do 100 unit plus multifamily." And I'm like, "Technically, we always have to ask." But yeah,
Yeah.
that's where the terms in private lending and in the residential real estate world, I would say, are very loose. Even when you're talking to lenders about loan to values, loan to ARVs, like everyone doesn't have definitive terms that are used.
Yeah.
Technically, the word hard money lending is still a big thing. And hard money lending is a core of where the private lending business started. And when I heard hard money lending is what I was getting into, I'm like, I imagine someone gives you a bag of cash to go buy a house in a parking lot, and if you don't pay them back in a year, they come after you. But hard money lending is basically what it's been called for decades now, because it did exist before 2008, but it was more of a each city has their couple guys who lend on this type of stuff. And hard money lending is actually just the term used for lending against a hard asset, but it has a derogatory sound to it. So that's where the word private lending came in. But just to tie it all back, is there's really no governance of the industry as a whole. So like the terms in general might float. So that's where people might hear different terms. Multifamily might be 2 unit to some, it might be 20 units to some. Commercial, people would consider commercial maybe just a commercial like an office building or
Right.
something. But technically, when you and I do a deal on a single family home, that is a commercial loan. So
Yeah.
I think because of the newness to all this, still, there is
Yeah.
so many different terms and usages of terms, tying that back to the quote unquote multifamily
Yeah.
distinguishing of a property.
And even with that, the credit union that gave me the commercial loan on the 5 unit, they do duplexes. There's still
Yeah.
commercial loans for them too. Yeah, it's really very
Yeah.
confusing for new investors. So I guess know about the
It
terms. I would
is.
say know about these different terms, but understand that there's depending who you're talking to, it can mean different things.
Yeah.
And so just be aware of that,
And
right?
that's where I tell people, like, out of those 10,000, which I didn't know there was that many, I think finding a good private lender is so important. And definitely not everyone operates like us. You'll reach out to us about deals that you might just have questions on. You and I both may know that deal probably isn't going to be done with us, but finding a good private lender that can help answer questions and guide you in the right direction, I think is so important when it comes to investing. And that's just ties back to everything in life, is relationships are so important. So I recommend to everyone, whether it's your first property or if you've done 100 and you did them all with banks, find a good private lender, that someone you can learn to trust. Obviously, you can't just trust anyone after replying to a cold email or something, but find someone that you're comfortable having a conversation with and that you trust them to guide you in the right direction.
Definitely. Another thought I had is for new investors, especially like when should they reach out to you guys to get a quote? Should they wait until it's under contract? Should they wait till they're like close to getting a deal, or
Uh,
just hey, maybe this is a deal, maybe it's not, and they just want to make sure they're running their numbers properly? Because a 6.5% interest rate versus
mhm.
7.5 can be a pretty big difference.
Oh, absolutely huge. I think this also, once again, like our whole entire conversation, this can go multiple different directions. I would always say this ties back to finding someone who you think you're going to work with and trusting that person, because once again, this goes back to the beginning of the conversation. Are you buying a turnkey one? Are you going to rehab it? Now, if it's your first time and you think, hey, I'm going to learn to do rehabs to rentals, that, although it's a shorter closing window, you have to be a lot more methodical about that. So I would say that as you're even just looking at deals, you want to be reaching out and getting quotes from your private lender on the rehab one. If you're
Okay.
buying turnkey, like you and I, like, you can send me something just general. It's probably not going to vary that much,
Yeah.
whether you're looking at one single family home or another single family home,
Correct.
even up to duplex, quadplex, like might change a little. So I would always say try and reach out and get a quote and stuff. This ties back to, though, to that question of, I think that's one of the hardest parts about getting into this, is not only a private lender, but who do you trust to learn from on this stuff? I use artificial intelligence a lot to learn stuff, which we're fortunate to have now. There is a lot of good YouTube videos out there. There's blog sites, but I do think the industry is jaded by the amount of people that want you to join masterminds or who
Mm,
want to do all of this different stuff. And I do think there's both good and bad of those. Just we
yeah.
haven't talked about wholesalers, which is a good way to find properties sometimes. There's a million bad, there's a ton of good ones. And it all ties back to where are you getting the information from? That's why I think, like with what you're doing with this podcast and
Yeah.
breaking it out into so many different segments, I think it's important to find, once again, not only your private lender, but what podcasts are you listening
Right.
to? What YouTube videos are you watching? What are you asking your AI? What are you Googling? So I think it's a culmination of all of that. But I would say if it's your first deal, if you call a big private lender, some of the big dogs, which anyone can Google, we don't even need to talk about, like their reps aren't going to want to sit and talk to you about your first deal and
Yeah,
stuff. So
for
that's where
sure.
finding the right people is hard. And you can't even just Google that. Good private lender. You're not going to find it.
Yeah.
Once again, networking with people like yourself, listening to your podcast and who you have on here, it's so important to navigate through that at the beginning and the content that you're bringing in and learning from. I think
Definitely.
it's important, and that's why the people listening to this, tell your friends. It's just, it might not be every single episode, but you're
Yeah.
gonna take pieces from this, and that's where it's so important from the beginning of who you're working with.
Yeah, and that's why I'm doing the podcast, and
Yeah.
it's free knowledge, frankly. But
Yeah.
I'm really focused on bringing people like you who have the inside knowledge of what's actually going on, like from different avenues of real estate. The last one
Yeah.
was a real estate broker. You're in the lending side, right?
Mhm.
Coming on as a big multifamily investor, so a good mix of different
Yeah.
pieces of the puzzle. But I also do have a mastermind group and a
Yeah.
coaching program that I have. But I feel like there does have to be that trust factor, and there's so many of those programs out there. So I hopefully,
There is.
part of this goal too is giving you guys that information. We can build that trust together, and then when you're ready, then that's where the program comes in.
I think that is so key to it too. And that's where it's just like with the wholesalers too. It's not shooting down any type of knowledge or partnership, but it's so important to me. Social media, more than the groups and the coaches themselves of Jaded,
Yeah.
it's you have to find someone who has done it themselves, is doing it themselves. I think there's so many people out there that, might research it or might know someone who does it, and they're the ones out there coaching. I can personally say, from working with you, like you're out there actually doing this stuff and sharing your experiences and relationships. Like to me, that's the type of person that I would want to work with. So
Thanks,
that
James.
just is
Appreciate
what it
that.
is, and yeah, it's up to people to make their own
Yeah.
decisions, but I would want to work with someone, and not just saying this, such as yourself, who is doing this and also doing this, and not like I did it 10 years ago. I have a portfolio of 100 homes and now I'm just living off the cash flow. Like you're dealing with the ins and outs of the everyday. You're talking to me as a lender. You're talking to brokers. You're looking at deals. You're looking at packages. You have different types of properties, being single family, smaller multifamily. It's like you're
Hmm.
doing it. So
Yeah.
those are the people I would want to work with. And then also, not even propping up ourselves. When someone works with us, they're working with me directly as the owner. I don't have a team of 100 salespeople. You're not talking to someone. Like I'm doing this, looking at the deals day in and day out. And it might not be a fit for everyone, but those are the type of people I would want to work with, is the hands-on people, whether it's joining a group, working with a private lender, working with a wholesaler. Does that wholesaler just have a bunch of VAs in another country that are calling people, or are they out scouting for properties like, hey, I have
Right.
a handful of good properties now? And we could get into that with everything, title
Hmm.
companies and everything, building your team. And I think you can't be successful in this if you don't have that team. This is a hard industry to be a lone
Yes.
wolf in, and just
You can't
you're
do it.
going to every private lender looking for the lowest rate. You
Yeah.
don't want to pay to be a part of a group. You don't want to pay a wholesaler fee.
Yeah. I
You're
mean,
looking for the cheapest title company. That's a hard way to play this, and not saying you can't win at it, but this is definitely a sport. It's a team sport.
absolutely. Yeah. Yeah. It's just you're dealing with high dollar value acquisition.
Mhm.
Actually, at the last 10x real estate conference that I went to, I'm a big
Mhm.
Grant Cardone guy.
Oh yeah.
But he made a statement that was like, yeah, totally. He made a statement that if you're going to get into real estate, I'm trying to remember exactly how he said it. He said, stop worrying about spending money. Just stop worrying about spending money. You guys are worried about, oh, I got to put earnest money down. Oh, I got to do an inspection. Oh, I got to do an appraisal. So if you're worried about that, this is not the space for you. It's definitely a space
and he's touched on this also, not to interrupt, but also debt. This industry completely changed my mind about one, yes, you have to spend money to make money, and two, debt is your best friend. You will meet people who fund everything out of their own pocket, whose parents built portfolios and they're paid off and they're now theirs. But you know what? You make a great point, and Grant does too. If you're not willing to spend the money and you're not willing to learn how to utilize debt and understand that debt is your friend, you have to respect both of those things and utilize them correctly. But if you can't get over those two humps, I agree, you're going to struggle.
Yeah, because a lot of
that's
people
an excellent point.
Are worried with the debt, right? They've been taught their whole lives the Dave Ramsey way, buy everything with cash. Yeah, sure, that will work. But that'll work as a consumer. That's not going to work as an investor trying to build and scale a portfolio. Go look at even businesses. Go look at how much debt Apple has, and then and then compare that. Definitely good points. Good points. But yeah, we're running out of time. There's a lot I wanted to go over. We didn't get a chance to. We might need to do a second episode at some point.
Yeah.
But anybody listening, obviously James is looking for clients, and if you're looking to do some deals and you need those deals funded, James, where can people reach you and ask those questions? What's a bridge loan? What's a fix and flip loan? Which one's right for me?
Most definitely. Pinnacle Funding Network is the name of the firm, and you can just search us on Google, pinnaclefundingnetwork.com, James at pinnaclefundingnetwork.com. And then we do put a lot of stuff out. I would say LinkedIn is a primary piece you can look. We're putting what I think is worthy content of reading, is how I like to say it, every single week. We also put that on Facebook, and then goofy enough, I make some TikTok and Instagram videos just trying to explain some of the stuff in 30, 60 seconds. But a quick Google search and you should be able to find us.
Awesome. And I'll attest to this. I get James. Actually, I think James probably found me on LinkedIn. And,
I did.
And then guess what? He referred me to a property manager who I now use in Wisconsin, of all places. He's in Dallas, but they do nationwide loans. And
it's all about the team.
Exactly. Awesome. Hey, thank you so much, James, for bringing all this value today. It's been a pleasure having you on. And yeah, I'm sure the viewers will get a lot out of this. I got a lot out of this. So I really appreciate your time.
Sounds good. Thanks, Chris. Really appreciate it.
Thanks for tuning in to this episode of the Cash Flow Authority podcast. We hope the insights shared today help you take the next step toward optimizing your finances and building sustainable wealth. If you enjoyed this conversation, please take a moment to subscribe on your favorite podcast platform and leave us a review. It helps other entrepreneurs and investors discover the show. And don't forget to catch the next episode for more insights. Until then, keep mastering your cash flow.